Good afternoon, Stephen.
Well, we've had a big turnaround since this time yesterday, and it really looks like a broad-based selling of just about everything on the market.
Yes, this time Greece or Europe actually leading us down lower, much lower than, we've seen this week. We had a bit of a better week. But yeah, very, very bad news coming out of there. The market not reacting very well to it. We saw the United States close down about just over 1% there, and our markets following what happened in the States, and also Asia have down quite a bit today. So yeah, just a very red day today.
Well, perhaps just starting with Greece and also Portugal worries about their deficits there. And we saw the euro weaken below 140 to the US dollar. The rand, though, seems to be holding pretty steady around that 760 mark. So quite surprising, really.
Yeah, the rand is bucking it a little bit, not really buying so much into it. But, look, what Greece and Portugal brings attention to is emerging market, or maybe your smaller markets. And, the rand holding up a little bit there, is good news. But we'll see whether it can be sustained. It's still around about the 760 level, or, that will be a support for the day. So we'll see whether it can go up from there.
Well, seems to be quite a space of negative news coming into the market. We had some data out of the US last night. Initial jobless claims a little higher than expected. Durable goods numbers less than expected. So that perhaps starting the sell-off. But some good news. Ben Bernanke reappointed as the Fed chairman. That looks like it may have helped to limit some of the losses in Ntombenhle.
I think it did help a little bit. Ben Bernanke's second term, the confirmation there did help a little bit. But, market not looking at that at all. Risk fears and, global risk appetite going down because of what's happening in Greece and the rumblings out of Portugal. I mean, the Prime Minister of Greece came out saying that, they haven't asked for a bailout yet, or will ask for a bailout. But, the cost of insuring Greek debt has actually risen quite a lot. And that's really been the focus, where we've seen a run to safe haven dollar, safe haven US treasuries, and the market just bailing out now.
I see the UK financial sector also under pressure. Some comments coming out of Standard & Poor's, the ratings agency.
Yes, they came out saying that the UK banking system is not what they think it used to be, something about no longer considering it safe as well, or low risk or stable. And, that has also had a very bad influence in the Eurozone as well as the UK. And, those are important things. And it seems to be just negative news coming out, and the market really focusing on negative comments like that from Standard & Poor's.
Well, we seem to have had a bit of change in focus, as you were saying. We're in the middle of the US reporting season, but the focus has really switched to the economy rather than the corporate reports. And also, as you say, the market's now focusing on the negative news, ignoring the good news that might be coming out, whereas a couple of weeks ago it was a different story.
Yes, of the 173 companies in the US that have reported so far, I think about 137 have been, beyond expectations or better than expectations, and that seems to have fallen on the wayside. I mean, China started things off, with the limiting of bank lending, and the very more stringent requirements that are required there for lending. And then, what happened last week with Obama coming out and saying certain things about the banking reforms that they want to do, the taxes that they want to impose. So it's really been political wranglings, and it's been just negative sentiment. And I think people are looking forward to saying, okay, fine, going from here forward, what do we expect? Are these stringent proposals going to be put in place, or what is going to happen? And, they're believing it, they're buying that, the world is going to change. Maybe some of the relief programs that were put in place are going to come to an end now. Perhaps rates are going to start going up. I think Australia is also expecting rates to go up perhaps next week. It's just a really focus on the future right now, and people are not very optimistic.
You mentioned that the taxes on banks in the United States, so perhaps while the Northern Hemisphere is taxing banks, in the Southern Hemisphere the focus seems to be taxing resources companies. We have that proposed new tax in Australia, which could be quite a big setback for companies like BHP Billiton.
Yes, the Henry tax review, I think is what they call it, not very well received at all, especially from a commodity-intense country like Australia. And I think, what the main thing is that it's going to be affecting the iron ore side of things, and that's big money for companies like Rio and Billiton, and investors not liking it at all, the market not liking it at all. But I read today that Billiton will be spending about 1.93% to expand some of the iron ore operations operations in Australia to keep up with Chinese demand. So you've got, the Chinese demand on the one side and you've got the taxes on the other side. But, it's still in proposed at the moment, and we'll wait and see as to whether it will be affected. But it will be a huge effect on their revenues, a huge effect on their future profits.
Of course, in the meantime, we've had volatility building in the markets over the past couple of weeks. The Savvy here in South Africa rising from around 21 to close to 25 at the moment. I mean, do you think the investment picture is less clear this year than it was perhaps last year when we had that rally on the markets, and 2008 when we had the big fall in the markets?
I think we're still at the very beginning of the year, and we need to let it play out a little bit. Maybe we can have this discussion a little bit more intensely at the end of the first quarter to say, okay, fine, now that this quarter has gone by, what do we think? But I saw last week the VIX when last week Friday when Obama was bringing out his proposals, and the VIX there went up to 27 for around about 22. It's now sitting back at about 25, 24, somewhere there. And the Savvy has gone up also a lot, because we're a smaller economy, we're an emerging market, we're so dependent on what commodities do, what the dollar does, and what comes out of the States. So I think for now it has been a very, very shaky start from the beginning of the year. We will see, hopefully we'll see some type of stability going on. Whether these volatility levels can be maintained or not, we'll only see later on. But it's not as bad as it was before, but it's just a sudden spike that happened because of the regulatory stuff that came out last week, and just because of the risk appetite diminishing, and global risk becoming a major problem.